S&P 500 is down. Markets are volatile. Oil is above $110 a barrel. And the Fed is frozen. And the world is going crazy. Everyone is asking the same question right now. Should I be buying or should I be waiting? Now let me tell you exactly what I'm doing with my own money and why. Before we get into it, it'll mean a world to me if you subscribe to my YouTube channel. It really helps me a lot. I'm just a regular Canadian sharing honest finance content every single week. Now let's get into. I'm Chiran Lali. I've been investing into the stock market from the last 6 years. I started during COVID and I've seen many ups and downs. And I want to share something I do every single week. Now let's see where we at. The S&P 500 had one of its best week currently, so up 3.4%, Nasdaq up 4.4%, and everyone was celebrating. Bulls declared that the correction is over. But here's what the data actually shows. Only 27% of the S&P 500 stocks are trading above their 50-day moving average. So that's not a healthy rally. Only 27% is not good for the stock market. So that is a bounce, but it's a big difference. Oil is still sitting above $110 a barrel right now. The Bank of Canada is meeting on April 29th, and markets are pricing in zero rate cuts. Inflation is still sticky and the Fed is completely paralyzed. So on paper this looks really scary, and here's what am I doing. I'm buying every single week still, no matter what. And before you think I'm crazy, let me explain why. So again, in this situation, I'm not trying to time the market. Nobody can time the market consistently. You can, beat the market sometimes, but not every time. Not Warren Buffett, not Goldman Sachs, and not the smartest analyst on the Wall Street. So I stopped trying. Instead, I use the strategy called dollar cost averaging, also called DCA. Every week, same day, same time, I invest a fixed amount. So it doesn't matter market is up like it was last week, I buy. Doesn't matter the market was down from last month, I buy. Doesn't matter market is crashing, I buy. Market rallying, I go ahead and buy every single week without exception. So here's why this works for me. It's been working from last 5 years, that when markets are down, my fixed amount can buy more of a share. When the markets are up, my fixed amount buy fewer of the share. But over time, I automatically buy more when prices are lower and less when prices are high, without making a single emotional decision, without checking the news every hour, without losing sleep over what the Fed is doing. And Warren Buffett said something that changed how I think about investing forever. Stock becomes more risky as their price rises and less risky as their price falls. Let me say that again. Stocks become more risky as their price rises and less risky as their price falls. And also, this is in the book called The Intelligent Investor. So more risky when prices are high and less risky when prices are low. Right now, prices are volatile and people are scared. Now, let me show you the math on why staying consistent matters. Let's say if you invested $500 a month into the S&P 500 starting January 2020, right before the COVID crash. So the market was down 34%. And you kept buying every single month through the crash. By March 2026, you would have invested total of $37,500 of your own money. But your portfolio would be worth approximately $52,000 to $55,000. So that's a gain of roughly $15,000 to $17,000 on top of what you put in. Now, if you invested $1,000 a month instead, so that's $250 every single week. Same period and same strategy. You would have put around $75,000 of your own money, but your portfolio would be approximately $104,000 to $111,000, more than double your money. So that's some good gain just by showing up every single month. No stock picking, no market timing, no stress, just consistency. So the people who kept buying during the scariest moments, they won. And the people who waited, who tried to time the market, they lost. So if you stopped buying during the crash and waited for the things to feel safe, you would have missed the fastest recovery in the stock market history. And I'm not saying the history gonna repeat the future. History is a good predictor, but it's not always the case that what happened in the past will happen in the future. Market might go down, market might go in bear territory, and market might keep going up. Nobody knows. And there are some risks. Right now there is a real risk in the market. Oil is above $110. It's generally a concern of inflation. If the Middle East situation escalates, market could drop further. The Bank of Canada, the Fed in US, their holding rate means mortgage holders get no relief yet. And these are the real headwinds. But here's what I know for certain. I do not know if the market will be higher or the lower next week. Nobody does. What I do know is that S&P 500 has recovered from every single crash in the history. 2000 dot-com crash, it was recovered. 2008 financial crisis recovered. 2020 COVID crash recovered in only 5 months. 2022 bear market recovered. So every single time. So here's my honest advice for Canadians right now. If you are a long-term investor at a horizon of 10 or more years, keep buying consistently every single week or every month. Do not let headlines stop you. Do not wait for the perfect moment. It never comes. If you're nervous, reduce your position slightly, but never stop completely because the cost of being out of the market is always higher than the cost of being it during the downturn. And the bottom line is market are volatile right now. I'm still buying every single week, not because I'm brave, not because I know something that you don't, but because I have a system that I created. And I trust the system more than I trust my emotions. So build your system, stick to it, and trust the process. If you find this video helpful, please give this video a like and subscribe to my YouTube channel. I'll keep on posting videos every single week and give you the knowledge that you deserve. And I'll see you in the next one.